that the Glazer Group is going to present an overview of the U.S. tax compliance for U.S. persons with foreign assets and foreign entities. I just want all of you to understand that it's a lot easier to take care of things before there's a problem, and a lot less expensive than it would be if you wait till you get an IRS letter saying that, hey, you haven't filed something. And in today's world, the U.S. government has access into almost every bank in every country around the world. So your name could be coming up on a list, even though you might not think that they can find you. When we have done these voluntary disclosures, of course, we're reporting banks where people have clients, have some of you as clients, and they use that list and they ask the bank to please supply them with every U.S. citizen and every green card holder that might have a bank account in the bank. Now, the other thing, of course, is on foreign corporations. I would assume that they're going to get to that point also, where they're going to be able to find where you have foreign entities, like the thing in Panama where someone leaked all the information from an attorney. So you got to be very careful. Try to stay compliant. Try to think about it. And again, please call me 469-358-2818 or email me at mglazer@glazerfinancial.com. You can always use WhatsApp or Viper so that it's a free call. Anyway, myself, I've worked in the industry since 1960, and really in the foreign area since probably 1965-66. So I've been doing this for a long time. I'm a tax and forensic tax accountant specialist, and what that means is that I spent a lot of time working on big tax cases and do auditing pre the IRS agents coming in to look at information. So I'm a very good auditor. I've caught a lot of defalcations. I've salvaged a lot of tax cases by finding out ahead of time of what's been going on. I've spoken at numerous corporate and organization meetings, including for CPA societies, law associations, medical associations, Texas Medical, Oklahoma Medical, and for every hospital organization out there, meaning HCA when they were Hospital Corporation of America, Methodist Hospital, Baylor. So I've done a lot of speaking, and I also done a lot of speaking for resident programs in all these major hospitals, and I'm talking about all over the country. I've written and published many articles and publications. You can find a lot of them at my website, glazerfinancial.com. You could, and also I've appeared on syndicated television programs and local broadcasts over the years, going all the way back into the 70s and 80s, where I spoke with someone called Vanita Van Caspel, who was an old-time financial planner and did probably one of the first cable programs on planning. I'm a U.S. tax planner with extensive foreign tax experience. I worked on Motorola and General Dynamics and some of the other big clients. My partners in today's world are David Glazer, who's my son, and soon to be a partner, John Pocus, who's my grandson. In Texas, we have 30 employees. In Illinois, we have 20 employees. And we have two offices here in Texas, one in San Antonio and one up here in Dallas. So we have a considerable number of employees. We have about 2,500 tax returns that we prepare, but we have about 4,000 clients. We're a full service financial firm, and that means that we do property and casualty, we do health insurance, we do management of assets, and our main course is to do planning. We every one of our clients, before we take them on, we review tax returns and tell the client exactly where they're at and what they need to be doing, and then we move forward with that and give an engagement letter to tell you what the cost would be for us to prepare it, and then every year after that we ask the client to make sure that we do the planning because we need to make sure where we're at for this current year, and then what are we going to be planning to do for the future years. We provide sound financial information, and we help you identify goals. Our initial consultations are complimentary. The reason I do that is because I do these seminars in Belize and wherever else I get asked to speak, and since I do that for free, I just want to tell you that I'm willing to give each individual at these meetings a free complimentary consultation, which is a review of where you're at currently and to do some planning for the current year and look forward what we should be thinking about. We're coming up on December 31st of 2016, and we got to remember that not only do you have to plan for this year, but we have to start thinking about what we're going to be doing in 2017. Got to remember that the government changes the law at the end of the year, so a lot of times there's things that are happening that you need to be thinking about. Last year and the year before, it was about Section 179 and bonus depreciation, which are big tax planning breaks that the government puts in at the last minute. So you really need to be thinking about planning, and you need to be thinking about what you need to do and how you need to do it. You need to be thinking about setting up retirement plans. The current most popular is the cash balance 401k plans, which can give you considerable tax deductions. But you have to make sure that you have it all set up before December 31st, or you can't do it. Only thing you can do after December 31st is a KEO plan, which is the old-fashioned profit-sharing plan, which will give you a 25% deduction of your compensation. We're unique. Times change, needs change. We need to be flexible. We need to adapt. I feel we lead the field. We keep up to date on changes as well as likely changes on the way. We anticipate the direction, the problems that will surface, and we try to be ready to provide solutions. My staff, we tend to do a lot of seminars for the staff that we buy from providers, or that I myself give, or one of my employees gives, so that we try to make sure that they're up to date. A lot of it is learned as we go forward because we have so many clients. We run into all the issues that you possibly would have also. We really are proactive in the planning process, and we try to be proactive in knowing what's going to happen in the future and what has happened. It's a very unique accounting firm that we run. It's actually a full-service financial firm, and we try to be very unique in what we do. It is not necessary to know where you have been, but where you are going. Too often, we get clients in who haven't filed for 6, 7, 8 years, and that is a real problem. And we really need to know where we are going. We don't necessarily, once you're delinquent, then we have all kinds of issues, including these huge civil penalties for foreign entities and foreign concepts that are out there. We need to know where you're going. We need to know what you're going to be doing. We do what we call lifestyle planning. What is going to happen? Where are we going to be in 5 years with the political scene and whatever? We need to be thinking about Belize, so thinking about Europe, Austria, wherever it might be, Nicaragua. We need to be thinking about it. Are these places that we want to go to? And then we need to know that we're caught up in our taxes, and we know what are our plans for the future. What kind of business are we going to be running, or are we just going to retire offshore, Panama, Nicaragua, Belize, wherever it might be, Europe? And we need to get going. And we need to know what the banking laws in all those countries are. And of course, with Peter Zipper there at the conference, he has a tremendous amount of knowledge with the banking system. So you got to utilize these people. Joel Nagel, one of the best foreign tax lawyers, I believe, in the country. He tends to have a tremendous amount of information, and you got to utilize it. You got to spend time with him. their consulting time is worth a lot of money, and you need to make sure that you utilize that to the nth degree, as we would say. Again, you can always call me if you have an actual tax question or how do you handle something. Joel Nago, of course, can set up entities for you and things like that. But we, there's difference between the planning aspect and then how do we get things completed. People at this conference and who are going to be presenting can give you lots of ideas. Utilize them. You're paid good money. Utilize them to let you know where, how you're going to get to where you want to go. Of course, the biggest cost and hindrance to accumulating net worth is really taxes and penalties. If you can get control of that, you're going to be way ahead of the game. Of course, in this last election, or this election coming up, there was a big concern, and there is every year where they talk about, someone paid only 15% tax in the 15% tax bracket, and isn't that terrible? Well, actually, some of these things are created by the fact that there are laws out there, loss carry forwards, capital gains losses that can be carried forward for 15 years. We can carry back 3 years. So there's a lot of things you can do. It doesn't necessarily mean that you're doing things wrong. It just means that they're out there, and you as an individual need to think about those same taxes that you're going to pay. And the idea, truthfully, is to pay as little taxes as possible. I have an article that I think I presented myself that talked about the fact that it's our responsibility to pay less tax. It's our responsibility. Pay less tax. We can hire more employees. We can expand our business. We can create new businesses. Lots of things that we can do. And one of the big problems in today's world is the IRS has gotten to be very, very functional in auditing. They use the computers. They're upgrading their computers. So what they do is look at various things that are happening on people's tax returns and compare it to other tax returns. One of the things that they're looking at on audits is if you have income over $1 million, you can almost be certain they're going to take a look at your tax returns. And what they try to do is they try to reconcile what we used to call net worth auditing, and today I think it's a lot simpler because what they want to do is say you made $1 million. We want to look at all your bank statements to see if that's all it was, or is it 2 million, or is it 3 million? So you got to make sure that you account for all cash. We have an audit right now where the auditor, we found out Gary Shearling, who's my tax manager, was handling the audit, and he was showing me that the man was using PayPal. He was going to cash checking places and cashing his customers' checks and then paying his suppliers in cash. Well, you'd think, well, gee, how could anybody find that? Well, the IRS has methods where they can run a search on your Social Security number or your entity number, and they can find exactly how much income you have. And they try to reconcile the bank accounts to your tax return. And they go out there and search the web, no different than we would, to find out if you reported all your income. So over $1 million, they're for sure going to take a look at you. From $250,000 to $1 million, a little less suspect. And of course, one of the big areas, and that's why we all need to have entities. That's why you talk to Joel and you say, hey, I'm only making $50,000. I don't want to have an entity. It's going to cost me $1,000 to do the tax return. Well, if you have a Schedule C with a gross income over $25,000, that also is something that they absolutely might look at you on an audit. So you need to think about doing a foreign corporation or even a U.S. corporation, but you need to think about doing an entity. You need to think about doing a pass-through instead of putting it on a Schedule C. You got to make sure your LLC has 2 members so that you can, and you need to elect to file as a sub S or a C corp. Don't just assume that you want it to be on a Schedule C because it's going to save you money in tax preparation. Truthfully, in planning, that's the most important thing, because here you say, well, I don't want to spend $1,000. You have a Schedule C and you have $250,000 on it. You're going to be audited. The cost of an auditor are a lot greater than you can imagine. That now all of a sudden, instead of $1,000 that you would have paid to have a corporation tax return done, you're going to have an audit which could cost anywhere from $1,000 to $10,000. We have had situations where the fee could be $30,000, $40,000 because of the amount of time that it takes to defend yourself. Where we defend you. It's very important to think through what you're doing. Why is planning important? Of course, as I said, it reduces the penalties. It helps cash flow planning, and it gives a better picture of where you're at. It can help you in keeping your passport. The government is looking at people who owe taxes and saying, hey, we're going to stop this individual getting off the plane, getting off the cruise ship, going to the airport and getting on a plane or whatever. And it's important to make sure that we're current. And some people say, I had one individual who said, yeah, I know 20 people that haven't even filed because they didn't make enough money. Well, the IRS would say to you as you're getting off the airplane, you say, well, I didn't have to file tax returns. And the IRS agent might say, yeah, but you have how are you living? Got to be having some income. And just the fact that, like in Belize, I believe you have to have $2,000 a month. You got to show them that you have $2,000 a month to support yourself. So if you don't have the tax return, how do you prove that you didn't have to file? You got to make sure that you're thinking through what you're doing. It also, as I said, saves on the legal and accounting fees. And most importantly, which is something as I get older is a real issue, it reduces the stress that you have. If you're keeping current, if you're doing planning, if you're filing your tax returns, that's important. It reduces the stress. A lot of people coming to Belize, which is one of the places I'm considering, is the fact that it's nice to be there, but you don't want to make it complicated by being audited and possibly lose your passport so you can't go back to visit your grandchildren or your children or whatever it might be. Your passport is at risk. They have enacted a law denying or revoking passport for U.S. citizens who haven't paid their taxes. The State Department will block Americans with serious delinquent tax debt. So you can't just flee the country and think that, hey, I'm okay, because you might not be able to renew your passport. And then, of course, that's one of the reasons that Joel will talk about getting a second passport so that you can travel. And that might mean, even though you have a new passport, might mean that you still can't come into the United States, but at least you can travel. They could be allowed to rescind your existing passports. So you got to be very careful. The list of affected taxpayers will be compiled by the Internal Revenue Service using a threshold of $50,000 of unpaid taxes, including penalties and interest, which would be adjusted for inflation. But remember, you got to be able to prove the money, and you got to remember they have contacts into all the banks, so they're gonna know if you have $1 million offshore and that you're earning $50,000 on bond income, and eventually they'll know a heck of a lot more. So please, if you want to be able to travel, if you don't want to just be a hermit in some remote part of a country, you need to make sure that you're doing things properly. The overview of U.S. tax compliance, it affects U.S. citizens, residents, and green card holders, and you must report and pay your U.S. income tax on a worldwide income basis. So that means if you're earning money in Belize or Nicaragua or wherever it might be, you have to report it on your U.S. tax return. U.S. citizens abroad can take a foreign earned income exclusion, which means if you're there over 360 days, you can exclude, I think the number right now is 108,000, but you can exclude that. So you could earn 100,000. I have people who earn money in the U.S. And get paid in Belize, and they can exclude that from their income tax. So there's a tremendous benefit. Now, of course, if you have to pay foreign tax, you're not going to be taxed twice, and you're going to get a chance for a foreign tax credit on Form 1116. But you're either going to get the foreign earned income exclusion or you're going to get a foreign tax credit. But again, you have to do your planning to make sure you get foreign bank accounts. In the old days, we used to call it an FBAR, foreign bank account report, but now it's Form 114, and it's filed separately, and the due date in 17 is April 15th, and it can be extended. In the old days, meaning this year, the FBAR was due by June 30th, and you had to file it separately. Today, it is due, it's going in the future, it's going to be due April 15th, and it can be extended, but it has to be e-filed, meaning it has to be computer reported. It doesn't have to be mailed to Detroit. It's based on aggregate value of bank and financial accounts exceeding 10,000, and that means more than just ownership. If you have a brother or sister who has your account and you have access to that account, that means you have to report that. And more importantly, on Schedule B, you have to report that you have a foreign account, and if it's over 10,000, you have to tell them that. So that's where they catch a lot of people, because they have a foreign account and they don't file that Schedule B because they don't have itemization of don't have enough to file that form to report that you have a foreign account. The penalties, it's automatically, if you don't report it, as a $10,000 civil penalty. Willful violation, meaning that you get caught and that you say you didn't think you did it, but they prove that you were willful in not reporting it. It's a greater of 100,000 or 50% of the account balances. We've had people who have possibly done that. We've been able, I don't think we have had one where it's been willful, and you can sign something with the IRS, but you could potentially end up with criminal charges and end up in jail. So you have to be really careful what you're doing. Form 8938, which sort of gets confused with Form 114, gets attached to the 1040, and the threshold is a single person if you have $50,000 of other assets, or if you're single, or if you're married filing jointly, it's $100,000. Again, civil penalty is $10,000. Form 5471 gets attached to 1040. This is if you have a foreign corporation. Again, civil penalty of $10,000. And the important thing here is we've had a lot of people who come up on October 15th and say, well, I don't have the information. Well, you've got to file by October 15th with the extension, or otherwise that $10,000 civil penalty will come. And just in speaking about the civil penalty, those civil penalties, Gary, we have been very lucky. Between Gary and I, we have gotten rid of some, and we've gotten partial disposition on some, meaning that we didn't have to pay 10, maybe we had to pay 5 or 6 or whatever. But it's really a tough bind, and then of course it takes time to do that. So the accounting fee, and if there's a real problem, the legal bills are much greater. Now, the one thing about having a foreign corporation, a lot of people say, well, it's just rent, it's just interest, dividends, I don't want to report it. No, it's called Subpart F income in your 5471 foreign corporation. If it's interest, dividends, capital gains, and possibly rental income, it could be considered Subpart F income, and you're going to have to report it. With foreign trust, if you're a U.S. owner, you have to annually file Form 3520A, and a 3520 you file separately, due March 15th. It can be extended until September 15th. U.S. person who creates foreign trust is treated as an owner of the foreign trust. The foreign trust is treated as a grantor trust, flow-through treatment for taxation. And again, the penalty is $10,000 or 5% of gross value of trust assets. It's not worth not to file it. U.S. person treated as owner of a foreign trust also annually has to file Form 3520. It's filed separately from the 1040, and it's due April 15th. If you extend your 1040, then this extension date of the 3520 is also due October 15th. Again, the penalty is $10,000, and it gets worse because it could be 35% of the gross value of transfers, or 35% of the gross value of distributions, or 5% of the gross value of trust assets. As you can see, it can get very expensive, so it's really important that you use professionals to get it done. And unfortunately, in the accounting world at least, we have a serious lack of knowledge in the accounting field. Even the bigger firms, don't have the knowledge to take care of some of this. And of course, you get into the H&R Blocks and other small tax preparers, it's very difficult to find people who have that knowledge. Other reporting forms, you got to file Form 8865 for foreign partnerships, 8858 for foreign disregarded entity, Form 8621 for a passive foreign investment company, and again, these are all forms that you have to file. Just got to remember that filing the form, even if it's $1,000, is less expensive than getting any of those civil penalties for not filing. Current IRS procedures may be closing soon. Delinquent forms only with reasonable cause. No unreported income tax. Streamlined filing compliance procedure. Non-willful violations may require penalty of 5%, and it depends on circumstances in lieu of other penalties. Offshore voluntary disclosure program, including willful violations, require civil penalty minimum 27.5% value of foreign assets or 50% value if the foreign institution is on the list of publicly identified facilitators. Again, as you can see, the penalties are huge. U.S. persons, which include U.S. citizens, resident aliens, trusts, estates, domestic entities that have an interest in foreign financial accounts and have 10,000 any time during the current year, have to file this form, and that includes those individuals in U.S. territories and U.S. entities in those territories. If you're owner of record or holder, the legal title is your agent or representative. Or if you have authority to control the disposition of the assets in the account by direct communication with the financial institution, you also have to file. Got to remember, I've had several people, I hate to say it, but there's certain countries where people have relatives that control their account. Yet when they're able to go to that country, let's say India, they can call their relative and say, hey, I need 5,000, whatever the category of monetary value is. Can you pull it out of the foreign account and have it for me when I land in let's say, India? So at that point, you got to disclose that bank account. It's silly, it's too expensive. You have to file the maximum value of the financial accounts located in a foreign account, using the account statements to determine the maximum value of the account, and then convert to U.S. dollars using the end of the calendar year exchange rate, and report in U.S. dollars. It is not filed with the federal return. Penalties are up to $10,000 if non-willful. If willful, up to the greater of $100,000 or 50% of the account balances. And criminal penalties may apply. I know some of this is a repeat, but really these are very important situations. Beginning January 1st, the due date is April 15th, and it can be extended to October 15th. Financial account deposit and custodial held at foreign financial institutions or foreign branch of a U.S. institution, foreign accounts which you have signature authority, foreign stock or securities held in a financial account. You have, again, this is a repeat. You are the grantor and foreign are reportable, as in the Form 8938, foreign hedge funds and private equity funds, foreign real estate held directly or in an entity, foreign currency, precious metals, personal property, Social Security benefit provided are not reportable. As we move into more government controls, in fact, it gets closer to implementation, which actually it is in implementation already. There's more and more confusion. One of the main examples of this rule in regards to who should file Form 8938 and who should file Form 114. My only recommendation, and I have people who argue with me, if you have gold and it's in a facility, government has sort of included the fact that even if it's in a private storage facility, that could be considered to be a bank or a financial institution. So When in doubt, report it. They're not going to go to wherever and try to take the money, although I wouldn't be surprised if that doesn't happen in the future. Form 8938 applies to U.S. citizens, resident aliens, and non-resident aliens, but does not include U.S. territories that have an interest in special foreign financial assets, $50,000 on the last day of the tax year, or $75,000 any time during the year. The higher threshold amounts apply to married individuals filing jointly and individuals living abroad. Interest in specified foreign assets where you have any income gained or distributed from holding or disposing of the asset must be required to be reported, otherwise reflected on your tax return. You would report the maximum value of the specified foreign asset, which includes financial accounts, foreign and certain other foreign non-account investment. I know I'm moving pretty fast, but we have limited time, and I want to make sure I get through some of this. As you see things, if some of these things, again, please call me or email me. Joel Nagel and Mike Cobb know how to get a hold of me, and if it's mglazer at glazerfinancial.com or 469-358-2818. The penalty is $10,000 for failure to disclose, an additional $10,000 for each 30 days of non-filing after receiving IRS notice, for a maximum penalty of $50,000, plus potential criminal penalties. Government is serious, so we need to make sure that we're doing things. Assets are reported which are deposit and custodial accounts held at financial institution. Contents do not have to be reported separately. Foreign stock or securities not held in a financial account, and foreign partnership interests in foreign mutual funds. In addition, foreign accounts and foreign non-account investment assets held by a foreign or domestic grantor trust, for which the individual is a grantor are reportable. Foreign real estate, precious metal, personal, and other collectibles are not reported. I really believe that precious metals should be reported. I just think that some of this is not really clear, but when in doubt, report it. They're not going to come and get it, even though you might fear that. In addition, Social Security type benefit programs are not reportable if provided by a foreign government. You do have to report your Social Security coming from the U.S. government. Forms you may need to prepare: Form 114, Form 433A, collection information for wage earners, self-employed; 433B, collection information for business; Form 872, consent to extend the time; power of attorney form for the Offshore Voluntary Disclosure Initiative. And by the way, the simple filing of the offshore voluntary disclosure is closing. The ODVP, as we call it, was changed June 18th, 2014, and it's going to be eliminated. The easy of that. The Offshore Voluntary Disclosure Program, or OVDP, allows taxpayers who have undisclosed income from foreign financial account assets a chance to catch up with their tax filing information reporting obligations. 55,800 taxpayers have entered the IRS OVDP program, paying more than $9.9 billion in taxes, interest, and penalties since 2009. So there's every reason why they're going to keep coming after you. They have seen, just by telling people that it's out there, that government's pretty collecting this money. They have a streamlined filing compliance. This is what I was talking about before. That has led to the submission of over 96,000 delinquent and amended income tax returns, paying approximately $450 million in taxes, interest, and penalties. It's a lot. So let's get with it. The Foreign Account Tax Compliance Act requires foreign financial institutions to report on the holdings of U.S. companies, or else face stiff penalties of up to 30% on their income from U.S. sources. Call us or check the IRS website, as some important forms and phone numbers for the ODVP have changed. Really very important situations. Again, here are our contact information. Call 800-999-831 ask for myself, ask for David, ask for Raphael, ask for Teresa Johnson. These are all people that can help you with some of your answers. This is the list of documents that if you want us to do a financial physical. And again, lifestyle planning is what it's all about. You need to decide what you're going to do, where you're going to do it, and then you need to talk to Joel Nagel, myself, Teresa Johnson, and Gary Shearling, anybody in my office at Glazer Financial, and supply us with at least 3 years of tax returns. We will review it and tell you what we think. We'll probably ask for more information, especially if you don't send us all your international information. This information form is if you want to just ask us some questions and you don't want to call us on the phone, you can fill this in and give us your email, and we will get back to you. Jessica Murray is a person to contact in order to set up a conference call. I like to do everything by appointment, even the calls, because sometimes they get very extensive. I like to include at least one of my accountants, tax preparers. Teresa Johnson and Gary Shearling have worked with me extensively on these foreign accounts, although I have 4 or 5 CPAs on staff and road agents. I have another 2 or 3 people, and everybody is somewhat familiar with all this. But my recommendation is to talk to Maury Glazer at 972-385-0007 or 469-358-2818 or 972-385-0007. Talk to Teresa Johnson or Gary Shearling. And okay, I just want to finish up with telling you, you really need to develop a lifestyle plan. You need to make your move offshore less complex and do it at a reasonable cost. We have to review previous year tax returns and find out what might have been missed. We need to find out the tips and regulations for expatriate income tax filing when living abroad. Avoid paying U.S. income tax on foreign earned income as well as other worldwide sources of income to avoid severe penalties and criminal offenses, often unknown to you as an expatriate. Do you have a foreign bank account, foreign corporation, foreign trust, or other entity? You need to find out what you're required to do. You need to file Form 2555, 1116, 3520, 5471. These are some of the main things. 1116 is a foreign tax credit, 3520 is trust, 5471 is foreign corporation. And if you've missed previous year's tax filing, we can help bring you current to avoid penalties and possible criminal charges and regain your tax status. Are you a non-resident alien, non-U.S. citizen living abroad who owns U.S. rental property securities or properties or securities? You may need to file Form 1040-NR. So even though you're not a U.S. citizen, you still might have to file the forms. Today, if you own a foreign property, you potentially might have to pay a 30% withholding tax until you get a TIN number and file 1040-NR. So please contact us now for a complimentary consultation with a free 3-year tax review. Get these and all of your questions answered by networking with myself and the staff at Glazer Financial Network. We are here to help, and unless you call, you're not going to know exactly what you need to do. Thank you, and have a great time in Belize. It's a great country. I'm sure Joel and Mike and Peter Zipper have a lot of great information they're going to be giving you. Thank you, and have a great time.